Hi folks, this is Lee with the Market Sense for the week of April 7th, 2021. The charts in this presentation come to us from the Trade Navigator software that's put out by Gettess. And this is a weekly representation of the TLT, that's the U.S. long-term Treasury bonds, and might have an opportunity here. This is the first time in, a couple months at least, that they've been able to reach up to the upper band. Now, after all this beatdown, they certainly could rally a lot harder than this. It's very possible. But this is 137.84 is the upper band. I think you got to look at the 137, 138 puts and see if you can get something off in the options there. What you'd be looking for is a move back down to the 134.50 area. That's the lower moving average here. Not looking for a extension of the move, even though that could happen too. But yeah, that's what we're looking for a move from the upper band back down to the lower band. That's a probability. If they were to go much higher, if they were to take out, say, even 139, yeah, then I doubt that's really working. And certainly 140 would be enough to run for cover. I'd get out of the position then, but there's a potential sell right there that is at least interesting, depending on where they open Wednesday morning. Stock market. This is the SPY, and there's not much to say here. They opened at new all-time highs, and they're still at new all-time highs. And if you need me to beat you over the head with this, I will tell you again, do not sell a market making new all-time highs. Just don't. Not unless you want to lose money. It's just a bad time to sell. Now, this will come down at some point, and then hopefully we'll see something we can do, either to buy it again or maybe to sell a retest. But a market running to new all-time highs? No. No thanks. There's nothing you can do. If you're long, that's great. And if you're not, well, you certainly can't sell them. And buying just is too much risk. Where do you put a stop? So, sorry. It's a great move. We're not in it. Can't do anything about it. The QQQ, representing the NASDAQ, isn't quite as frothy as the S&P, although it does look good. The highest possible support this week was around the 323.33 area. They haven't been down there. They opened higher and came down a little bit, but did not get down to that support. And then the 329 area was potential resistance, but they're clearly trading above that. In fact, the high is within just 5 points of the all-time high back here, which was 338.19. You'd have to assume they're going there. With the S&P as strong as it is, you would think they'd probably make it and go to new highs. Of course, if it fails up here, that's something to look for. If they go to test this high and fail and start turning down, then that could be a reason to sell because, the S&P doesn't necessarily have to lead them. The NASDAQ has a mind of its own. If it starts turning down, that could be kind of serious. But at this point, I would have to assume, given the length of this bull market, that you have to give the upside a little more credence, a little more potential there. So at this point, they look like they're going higher. I'd just be monitoring them to see if they fail at this new high or fail to reach this new highs, because that might create a selling opportunity. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we're looking at.